everyone, I'm Kathy Lean with BK Forex. Today I'd like to share a simple swing trading strategy that beginner traders can use right away. While some of my more experienced viewers may find this strategy too basic, I can assure you that even I, someone who has been trading for more than 20 years, use this technique to filter out weak trades as a component of my overall trading strategy. This strategy uses moving averages, the simple moving averages to be precise. For beginner traders, the SMA is calculated by simply adding the number of time periods and dividing it by the units measured. So for example, a 20 SMA adds up the last 20 prices and divides it by 20 to come up with the current SMA level. This strategy that we'll be talking about today involves four moving averages: the 20, 50, 100, and 200 simple moving averages. In this dollar-yen chart, you'll see that I've laid on all four moving averages on my chart. The yellow line is the 20 SMA, the blue line is the 50, and the red line is the 100, and the green line is the 200 SMA. And we're looking at a daily chart. What we want to look for is called the perfect order, which means that in an uptrend, the 20 SMA is above the 50, which is above the 100 and 200 day SMA. When this happens, it means that the short and medium term trends are positive. In a strong downtrend, you want to see the 20-day SMA below the 50, which is below the 100 and 200, like the Eurodollar chart you see here. Trading this setup is simple. All you want to do is wait for the perfect order to form when the moving averages move in perfect alignment. You can see that happening on this dollar Swiss chart, where the 10, which is the yellow line, is above the 50, which is the blue line. The 20, which is the yellow line, is above the 50, the blue line, which is above the 100, the red line, and 200, the green line. When you see this perfect form on a closing basis, and the price is above all of the major moving averages, it is time to buy. Now, since this is a swing trade, going for big pips on daily charts, your stops are larger and your position sizes are smaller. A good starting base would be a 150 pip stop, 300 point or more target. In this example, dollar Swiss triggers a buy at 92.94. So the stop would be 91.44 and the target would be 95.94. In this dollar CAD chart, we see the perfect order forming for a buy at 128.93. Your stop would be 127.53 and the target would be 131.93. which is hit about 2 weeks later. For a short trade, you want to see the 20-day SMA below the 50, which is below the 100 and 200-day SMA. You also want to make sure that the price is below all of these major moving averages, like this Eurodollar trade. As you can see in this chart here, you enter the trade at 110.65. Your stop is at 112.15 and your target is at 107.65. And you can see another perfect order short on this chart that works out quite nicely at 105.82. Pretty powerful stuff, right? If you trade the strategy, I have a few tips for you. First, if you have a 300 pip target and the trade's moved 150 pips in your favor, move your stop to break even. Lock in some profits. Take some money off the table because you never know what will happen next. Defense is your best offense in sports and in trading. If the currency pair is already in a downtrend, with moving averages all in perfect order for some time, when you get a fresh signal, be a bit more conservative with your target as the move begins to mature. With this in mind, the perfect order does have one big problem, which is that it's rare. It only happens once every few months. And when you take the trade, you may be in it for weeks. So for traders, investors, whatever you consider yourself, you may end up losing interest, forget about the strategy, or don't have the patience to trade it. I'm the same. I actually don't have the patience or the tolerance for the perfect order. Instead, what I do is I use it as a complement to my zip trading strategy. And you can do the same for your trades. If I have a zip sell signal, for example, I will only take trades where the price is below all of the major moving averages, ideally in the perfect order on at least one time frame, either the 1 hour, 4 hour, or daily chart. The more the merrier, of course. If I get a buy signal on my zip strategy, my best trades are the ones when the price is above all of the major moving averages, ideally in perfect order, on at least one time frame, the 1 hour, 4 hour, or daily chart. Combining this swing trading setup with my zip strategy is how I achieve results like this. 23 out of 25 winning months. Steady, consistent results with low drawdown. So if you're interested in learning more about how I trade, about Zip, there are some useful links in the description of this video. Otherwise, I'm getting back to trading, and I will see you on the other side.